Now, Democrats are doing everything they can before the November election to cover up the president's mishandling of the economy. Instead of talking about Barack, they're talking about Bain. And if you let them, they'll tell you that Mitt Romney's record at Bain Capital, you'll get things like, oh, he killed a steel worker's wife. No, not true. He shipped thousands of jobs overseas. Not true. He purposely bankrupted companies to make millions. Totally not true. If Bain is so bad, then why do liberals trust them with their money? I mean, Mitt Romney's old company. That's right. It's hypocrisy at its finest. Government worker pensions, liberal universities, even left-leaning foundations and charities have parked their cash with Bain Capital. And it adds up to almost $2 billion over the past 15 years. And those are just some of the numbers that have been reported. The list of investors is pretty incredible. Here are a few of the big ones. Let's see. The State Teachers Retirement System of Ohio, $767 million. Iowa Public Employee Retirement System, $177 million. The University of California, hey, that's a right-wing organization, $225 million. And the granddaddy or grandmother of them all, the Oprah Winfrey Foundation. Oprah, that Oprah, the Oprah, big O, Oprah. We know she loves Obama, but apparently she trusts Romney with her money. This is a classic example of limousine liberalism. Let me welcome my guests, Andrew Schiff of Euro Pacific Capital, to our studio, and Ed Butowski of Chapwood Investments joining us from Dallas, Texas. So are you surprised to hear that all these public unions and well-to-do liberals and university endowments have their money in Bain Capital?
Not at all. It's totally predictable. I mean, the problem is basically in years past, these pension funds were able to meet their obligations. They have a lot of obligations. They got to pay off these pensions for years to come, and they have a kind of a fixed number of contributions. To meet those obligations, they were normally able to buy conservative investments like treasury bonds, corporate debt, yielding 6%, 7%. That's all you really needed to meet your obligations. The problem is, over the past 10 years or so, government debt, the interest rates have been pushed so low by the Federal Reserve in order to kind of juice the economy that you can't get a 6% return by buying plain vanilla bonds. It's completely impossible. So, and also the stock market has been shown to be very volatile, and a lot of these pension funds they can't buy these volatile assets because it would be, not responsible for them. So the only thing that's left is the safe returns that are generated by private equity firms that go in, see an opportunity with a public or private company, make a leveraged buyout, float some new debt, restructure the company, and they do get predictable and pretty steady returns. And those are the kind of returns that are attracted the smartest money, and the smartest investors run these endowments and pension funds.
And other than maybe watching the movie Pretty Woman, most people don't know how private equity works. But are you amazed at the laundry list of progressive organizations and progressive people who all seem to want to make money this way?
Yeah, I mean, it's not surprising at all. And, and I'm happy you pointed this out. This is an important discussion because most people have absolutely no idea how these endowments and how these foundations manage their money. I was looking at Yale today, and if you go online and look at the Yale Endowment 2011, you'll see that a huge amount of their money is in absolute return, which is another way of saying hedge funds, and a big part of it is in private equity. Bain is one of the better private equity firms, but it's really interesting because people are falling over themselves to give money to the Bain Capital, the Kleiner Perkins, and other firms like them for exactly what Andrew just said. The reason is that they're underfunded. They're not going to get there with interest rates being at 1.7, 1.8%. And, over 90%, I think it's close to 90% of these private sector foundations and pension plans are underfunded. I mean, that's the next great disaster that's going to occur. So they better get their money in groups like Bain and Kleiner Perkins and other private equity. Otherwise, we're going to have another catastrophe that your brother Andrew, Peter, is going to be able to talk about quite a bit.
Well, I don't think I'm making an out-of-bounds pop culture reference when I say the Richard Gere character from Pretty Woman. Why don't you explain real quick how private equity works?
Sure. Well, there's a lot of kinds of private equity. Lumping it all in one box is difficult. But one of the kind that Bain is most famous for is to go in, they see a company that's struggling. And usually these companies are struggling for structural reasons. They have management that's not working. They don't have access to capital. They've got a bankrupt business model that's not making any money. Now, all these smart guys,
bloated payroll.
Bloated payroll. And these really smart guys work for these for these private equity firms. They see an opportunity. They see, we buy this company, we make these changes, we do these things that management cannot or will not do. A lot of times it's too emotional decision for these managers. They're tied up by their own boards, their own loyalties, and so forth. They see an opportunity. They can come in and they could restructure and revitalize a potentially dying business, and kind of match investors with opportunities. They provide some kind of financial grease, if you will. And the truth is that most of these deals they do are not involving bankrupting a company. There certainly have been a few over the years where the expressed purpose of a private equity firm was to go in and extract value through floating debt and paying out big dividends to shareholders. That is true, but that's the exception rather than the rule. Most of the time they create value and they go in and they save these dying companies that would not exist otherwise.
Well, Ed,
I got to add something to that. Remember this, I'm down here in Dallas, and the governor of this state did this country a tremendous disservice when they were running in the primaries. He said it was vulture capital, and these companies do not, hence the word private. They don't come in out of nowhere and just start putting money into these companies. They are, as you said perfectly, Andrew, invited in. Vulture capital would be only done in public securities. That doesn't happen here. And one other point I just feel really necessary to make is that, remember this, these endowments and these foundations and these pension plans grow their money tax deferred. The environment that they have is growing tax deferred for the most part. When they want to invest in a private equity, they have to put their money in an offshore vehicle to invest in order to maintain that tax deferred status. That's why almost all of these pension plans have offshore funds. So when you look at the Indiana pension and you look at the Michigan pension and all the ones that you listed earlier, they all, in a de facto way, in an oddball way, all the people who participate in those pensions have offshore accounts themselves.
No, one of the things we just had Steve Forbes in here. By the time Bain or any other private equity firm comes in, probably Forbes has covered the almost demise of the company, right? I mean, what's funny about the liberals attacking layoffs or what have you is then the whole company would be gone.
Sure.
Yeah, I mean, the company was already going out of business. This is the last chance saloon here.
I mean, outsourcing is not the problem. Private equity. Private equity is trying to deal with a bad situation that we have, that our industrial base is being hollowed out and being outsourced. But the reason why that's happening is because we're not competitive. We can't compete overseas with a lot of the manufacturing economies, which is a function of our monetary policy. It's a function of our overregulation. It's a function of a lot of things that come from Washington, not from Wall Street. I mean, Wall Street just trying to play a bad hand that it's been dealt. And oftentimes these moves, have benefited companies severely. It's much easier to see and makes for much greater headlines when you see, yes, a private equity firm came in here and they shut down a company. Oftentimes what they do is they try to shut it down in a way that extracts the most value for the shareholders, which is, something that in capitalism is a legitimate function.